Welcome back, students who are taking financial accounting, and in this series of videos we are working on the assigned homework problems for Chapter 9 from the Digital Study Guide, and the problems Group B. Note, accounting is about understanding the concepts and then applying that understanding to the situation at hand. If you get the application aspect wrong, that is one thing and is easily remedied by watching someone else work the problem. However, if you don't understand the concepts, that is a whole other thing. Watching a problem worked out will not help you if you don't understand the underlying concepts. Go back and study the text material again and watch the theory videos. If you still don't understand the concepts, then either email or telephone an instructor to get help with that understanding. All right, so let's see here. We're on 9-50, and it says balance sheet disclosure of long-term liabilities. The accounting records of Romeo include the following items at December 31st. Payable, payables, all of these are payables. It says report these liabilities on Romero's balance sheet at December 31st, including headings. All right, so what they're asking to do is they're asking to create a partial trial balance here. Okay. So yeah, I had to make this smaller because I'm going to use up pretty much of this whole screen here, I think. So let me see here. All right, so I'm going to do this as if I was going to do it, which is going to most likely be different than the solution in the study guide. Again, the authors in the study guide have a tendency to do things in single step versus multi-step, and I prefer to use multi-step because it just, like I said in previous videos, it makes for analysis that much easier. So I'm going to work it the way I'm going to, but I'm also going to take liberties in that, like for example, I'm not going to write in the heading here, okay? That type of thing. So if you compare what's in the solution manual to what I have here, you'll see the differences, and just realize that I'm not, I'm just doing this on like as if it was on scrap paper. In other words, I'm doing it like you as a student, all right? And therefore I'm not going to be writing everything out and making sure all the formatting is correct. However, with that said, formatting is important. It is very important, and I see it all the time when I'm grading projects where financial statements have to be submitted, even journal entries. Students don't format correctly, and they lose points because they don't format correctly. Formatting is part of generally accepted accounting principles. So even though I'm taking shortcuts here and I'm abbreviating and I'm not putting in everything I'm supposed to, I know the correct formatting of financial statements. And if you need to learn about that, go back to the introduction to accounting and bookkeeping videos, and or go back to the third chapter, or even, I mean, by now you did the bookkeeping project, and if you had gotten errors wrong, then some of the errors that you make, or you can call and speak with an instructor about these types of things. But now I'm belaboring the point. All right, let's get on to this problem here. All right, so yeah, I'm not going to put in a heading. The heading should be Romero Corp. Balance sheet partial, and then as of December 31st, 2014. But I'm going to have a section called Current Liabilities. And under the current liabilities here, let's see what we have here. And I know it's small, but I'm going to have, and you remember, you want to list these things in order from short-term to long-term. So my accounts payable is going to be, let me do it. Let's see, I want basically 1, 2, yeah. Notice what I'm doing here. If I were doing this to actually create a proper balance sheet, what I would end up doing here is I probably would end up rewriting this a couple of times, but for right now I'm going to take a couple of quick shortcuts here. So I'm setting myself up thinking that I'm going to have 3 columns. That's why I put these 3 hash marks here. And I'm just looking along, I'm putting them in for the simple reason because I don't rightly know exactly how many columns I'm going to need for doing the mathematical calculations. But just from experience, I know that I'm going to end up adding up my current liabilities and putting the total in the rightmost column. Okay, and then I'm going to have my current liabilities plus my long-term liabilities. So I have current liabilities, long-term liabilities, and that's going to give me a total liability over here, which I would want with my assets up here. Then I'd have my liabilities plus equity in this column here. So I'm kind of like setting up the structure here to have 3 columns, figuring that I'm going to have to do the math in that order. If I need to add an additional column, I'll probably add it over here, okay? But if I didn't have enough space on the paper, well, then I'd end up rewriting everything. So accounts payable is $23,450, and remember $, and generally use commas. Right, so that takes care of the accounts payable here. Let's see here, what do I have? Right. All right, so I have a salary payable. Okay, mortgage is going to be long-term, and it's telling me what the current portion is. I have my discount, so that's a long-term. My income tax payable is a short-term, as a current. The mortgage is long-term. Interest payable is a short-term, current term, and the bond payable due on 2017 is going to be long-term, right? Because that's long-term bond. And so I have also a salary payable and an interest payable and an income tax payable. So salary payable is going to be $73.50. Excuse me. Interest payable of $9,800. Interest payable of $9,800. Income tax payable of $18,840. Income tax payable of $18,840. And then I have the mortgage note payable current portion of $16,500. Mortgage payable current portion of $16,500. Okay, so this is going to be my total current liabilities, and I'm going to put that in this column, and notice I have the $sign because it's the first number in the column. Okay, and that's going to be $75,940 when I add it all up. Okay, excuse me. So then I have my long-term liabilities, and under the long-term liability, I have my mortgage note payable and long-term. Right. Now, I'm going to deviate from the way the solution is. Okay. The solution is kind of like saying, it's breaking out. Let me erase this here. It's breaking out this current portion of 16,500 out from this 126,000. Okay, so 126,000 and 16,500 gives me $142,500, right? Which is the way the authors are presenting the information. So my mortgage payable is basically going to be $142,500, and then less the current portion of the mortgage note payable. of 16.5, which gives me 126,000. Okay, this is the way I would present that mortgage. They're just the solution will just present it, and this is just the way the authors have been doing it. I'm guessing. So they're just going to show, yeah, that my mortgage payable is the 126,000, and that's all they're going to show because they've already broken out the current portion. But like I said, for analysis purposes, now anybody else who's looking at the financial statements would have to go back and they're going to be wondering, okay, this is 126,000. I have to find the 16,500, add them together in order to be able to figure out the 142.5, right? Well, it should already be presented on the financial statement. So whenever I create financial statements, I'll put in the value of the mortgage payable so that I know it's that's the it's 142,500, and then I also can see that the current portion is 16.5, and I can also see that the long-term portion is 126,000. So I get all three bits of information instead of just two. Okay. Next, all right. So let's see here. So next, we got rid of that right there, the mortgage there, and the mortgage there. Okay, the next thing that we have is the bond payable. Bond payable, and the bond payable is 235,000. By the way, $sign here, first number in the column. Then we have the discount on the bond payable, right? So I have my discount on the bond payable, and that discount amount is $12,000. Okay, so my total long-term liability is going to equal 349,000. Oops, wrong column. 349,000. Okay, and we're doing a mathematical calculation. So my total liabilities are going to be the total of those two together, and that's going to be $424,940, right? And that's the end of that mathematical calculation. That's the double underline. But on the actual, because this is a partial balance sheet, yeah, we're going to double underline that because this, that's the end of the mathematical calculation. That's all we're going to want to see, right? But if we were including, say, the asset, the equity section of the balance sheet, we would not have the double underline there because we have more information. But we've done the mathematical calculation. This is a partial balance sheet. The double underline represents the end of a mathematical calculation, and that's why you have to put it in. If you don't have it in there, it would leave someone to wonder if there's still something else to come. Okay, single underlines mean that there is a mathematical calculation, but it's not the end of the calculation. Okay, double underline means it is completely finished. So this is what the structure of my balance sheet would look like, using different columns, applying the information for breaking out the current, especially with the mortgage payable. That's something that happens all the time for as a long-term liability. Really, there's not much else to say. If you didn't understand some of this, feel free to telephone and speak with an instructor. But really, this should be old hat to you because it was covered back in the chapters 1, 2, and 3. So go back and watch those, and even watch the theory videos for like the introduction to accounting and bookkeeping, which covers stuff like this also. All right. And so with that, I'm done with this problem, and see you in the next problem for the last one in this chapter.